Hello and welcome to Halftime Report. Well, we're a few hours into the trading session. We have got a few hours more till we go into the weekend. For the time being, the bulls appear, well, they are in control actually, because we saw a bit of a downtick in, a couple of hours, an hour or so ago. And from there, we did see banks. We're holding with a gain of around 40 points. The Nifty Bank, that was the problem point. That was down close to around 100 points. So that as well has recovered a tad bit from the low point of the day. The party, though, is in the mid-cap index. A lot of stocks in there. They're celebrating Friday before we have ended the trading session, Mangla.
That's right. You know, usually it's the Dawa Daru stocks that people talk about. Right now it's Dawa. It is. So Lubin is up almost 9%. We have the pharmaceutical index doing rather well. Glenmark ahead of numbers up by almost 3%. But it's interesting, you know, the clock has struck 12 and it is the Tata Steel con call time.
Absolutely.
And just pull up the intraday chart of that stock. It's up and above, just as we speak, close to around 3% higher on Tata Steel. So this is something that we will most definitely keep an eye out on. Our team is listening into the conference call. And any important data points that you'll be watching out for?
Actually, Mangala, we'll just run through the headlines. We'll come back. I'll tell you what to watch.
All right, we will do that right away. First up, all the top stories that we're tracking. Sensex, mid-caps as well as the Nifty trade higher as hope builds up that the Prime Minister may announce more steps to revive demand in its Independence Day speech. The pharmaceutical stocks lead the gains with capital goods and realty sectors also adding some green. Autos as well as financial stocks, however, underperform.
Shares of Aisha Motors as well as Hero MotoCorp see profit taking after their recent run-up following a weak first quarter. Tata Steel, however, trades in the green. Remember, we're waiting management commentary. The second quarter of this year will look far better, though quarter one was a big disappointment.
The Supreme Court will be hearing the high-profile telecom dues case later today. Under discussion is also whether banks have higher claim than the government to revenues from sale of spectrum by bankrupt telecom companies.
Okay, all right. Well, we're waiting for the WPI numbers. But also, before that, let's just quickly run you through what you should be looking at in terms of Tata Steel. The numbers first. The numbers were a disappointment. If you look at the consolidated numbers, the margins came only at around 2%. Right. We're working with a number of close to around 6% odd. The good part is the debt was maintained at around 1,04,000 4,000 crores approximately. Now let's run you through both the figures that we track very closely. The India EBITDA per ton, we were working with a number of around 7,000 rupees per ton. That was a multi-quarter low, but it even missed that. It came in at around 6,100 rupees. In terms of the European business, we expected it to struggle. Should come in at around negative $25 to $30 per ton. It came in worse than that, close to around $42 per ton, a negative EBITDA loss out there. But the con call is going on, Mangalam, and the key factors that we'll be looking at. I said that, yes, the Europe was bad, in terms of a negative EBITDA number of around $43 per ton. The problem is, does this include, a sale of carbon credits?
Right.
If that's the case, then the number will be even worse than that.
Okay.
But if it doesn't include, then it's rather okay. The other part is what's happening with the European business. There was talk that the government is going to be giving some support. The last time I quizzed the management on the con call, they were not committal out there. So we'll track that as well. Also, realizations. As of now, steel prices have seen a big surge in comparison to what we saw in quarter one, and that will help the profitability in the second quarter. So what is that number? We'll wait for that. The last time the management told us that, in quarter one, the realizations will be down by nearly around 4,000 rupees, and that was the case. And finally, the most crucial factor, is there a deleveraging plan that they have? Earlier, they were guiding for around $1 billion in terms of debt reduction. The last quarter, they said, no, things are too uncertain. We can't do that. So shortly, we'll try to get you all those numbers. For the time being, the market is saying quarter one is weak, but we'll still love you for the second quarter because that's going to be splendid. And that's why from the low point of the day, it's seen a sharp spike up.
Absolutely, Nigel. The second quarter, not just for Tata Steel, perhaps the entire steel industry, because that's what the market is saying. Just pull up JSW Steel. Yeah. That one too has moved to the high point of the day. We have the entire metals pack doing rather well. But what's not doing well, and despite positive commentary coming in the con call, are a couple of these auto stocks. Aisha Motors closer to the lower end of today's trading range, and Hero MotoCorp as well. Rima joins in with what the management said in the Hero con call and her review of what Aisha Motors did as well in the first quarter. Rima.
Let me start with Aisha Motors, where Q1 was weaker than what the street was anticipating. The company reported an EBITDA of only 50 lakh rupees. There was a net loss of 55 crore. In fact, the gross margins shrunk by 560 basis points on a quarter-on-quarter basis. The management commentary was mixed. On one hand, they said the demand for CVs has remained weak, but on the other hand, they do talk about inquiries being higher than pre-COVID levels and bookings being back to pre-COVID levels. The problem for Aisha Motors is also the high valuations it's trading at, which is why CLSA today has downgraded the stock to a sell, lower the target price to 19,000. They say the stock is trading at an 80% valuation premium to Hero MotoCorp as well as a Bajaj Auto, which is untenable at a time when its operating metrics are deteriorating. For Hero MotoCorp, the earnings were weak, but it's better than what the street was anticipating, to be honest. So for their margins came in at 3.6%, which is better than the 2.4% that we were anticipating. The management did indicate the demand is picked up, the market share is increased. But one thing which could be going against Hero MotoCorp is the fact that it's outperformed its peers. So on a year-to-date basis, Hero MotoCorp has rallied nearly 13%, while its peers like Aisha and Bajaj Auto are still giving you negative returns if you look at it so far in 2020.
Rima, thanks a lot for that. So that's about those two stocks. But at the bottom of your screen, there is the July wholesale price index inflation or wholesale price inflation coming at 0.6%, a negative 0.58%. This compares with a contraction of 1.8% a month ago. And this number was close around 3.2% contraction a month prior to that as well. So it has been reducing. Need to know what exactly is taking place out there. But more importantly, we do have the CPI numbers of July already, and they've been close to that 7% mark for the past few months. So we'll keep an eye out on these details. The headline number is a contraction of 0.6%, which is lower than what it was in the previous month, 1.8% contraction, but we will await more details coming by. The another number that is flashing is manufactured products. I missed that number. I think it will come up for you again. Manufactured products, there was a contraction as well. What we'll do is actually we'll focus on individual stocks, and once we have all the details of the WPI, we will get cracking on discussing that. Talking about individual stocks, then the financial space, Abhishek joins us to tell us what he made of City Union Bank and Sheeran Transport. Abhishek, Sheeran Transport way off lows, but City Union Bank, you said the commentary was good as well as the P&L.
Well, to begin with City Union Bank, the results are really good, Manglam. So moratorium is now at 12.45% of the accounts. Loan growth better than expectation, growing more than 7% YOY and about 2% sequentially. The asset quality has improved, and they have been able to improve their net interest margin by 7 basis points quarter on quarter. Their P&L has beaten our poll both in terms of NII as well as the PAT. Coming on to Sheeran Transport, the collections are at 73% as of July. Their AUM growth remains tepid at 5% YOY and about 2% sequentially. The disbursements, they are below 1,000 crores, which compares to a quarterly run rate of 10 to 12,000 crores that we have seen earlier on account of lockdown and RTOs remaining shut. So the NII growth was weak, down about 7% YOY and about 5% sequentially. So net interest margin is at 20 quarter low of 6.42%. Asset quality has improved, but their P&L, both NII and PAT is below our poll. I've just understood from analysts, in the analyst con call, they have mentioned that both Sheeran Transport and Sheeran City Union Finance merger is now taken a backseat, and that is why you are seeing both Sheeran City Union Finance and Sheeran Transport being up in trade right now. Back to you.
Okay, all right, Abhishek, thanks so much for joining and filling us in with all those details. For the time being, we'll slip in a short break. You come back, we'll address those WPI numbers, and we'll also get you more on the other side. Stay with us.